Alright boys, Friday, end of the week, but we have a little bit of movement here. It's not like it's yesterday we were expecting a bit of US dollar rally, and although that happened, what in terms of the size of it, much bigger than I was expecting. The speed of the recovery in the dollar yen. So once the stops were hit on 110.40, I thought they would peter out and would start to ease back down, and the weakness in US yields take over again and the downtrend resume. I was so I could see the rally coming, but it's shot a little bit higher. I thought it would fade, and after we took that stops underneath 1050 here, 1060, the low from last week, it was probably sort of natural that we would get some sort of US dollar selling again. It didn't come across in the dollar yen, but it's come across a little bit in the euro. So what's that really mean? It means that the yen crosses are back in rally mode. And so if we look at the euro yen and the pound yen, both of those really shooting higher, dangerously so. If you trade those on the fade to rally sort of scenario, got to be a little bit careful here. They can still roll over, and there's still ways down, but just got to be a little careful the market doesn't run forward. Now this wasn't BOJ or anything. Most of the move was last night. BOJ came out, nothing new, nothing exciting today in Asia, but the big moves came overnight, where there was a little bit of US data that was stronger, and that's sort of reinforced the hawkish view from the Fed. So now you get this sort of scenario where everyone's like, oh, manufacturing index, Empire manufacturing index really strong, Philly manufacturing index really strong, things are doing better, and sort of cherry picking it, but it was probably more a positional thing than anything else. So what I mean by that is that the market was pretty heavy short, and at least in the short term anyway, on dollar yen. And that way we could shoot higher. Same as the pound yen in particular as well, was under pressure a lot as well, so it had a fair bit of room to short squeeze. Now whether we can evolve into extensions here, basically into uptrends, is a little bit trickier. Now it sort of feels like that's the case, right? So But what you want to see is a bit of confirmation on that. So as a trader, next week what I'm looking for is a dip to be bought. Alright, a dip to be bought. So a dip on dollar yen down to say 110.60 or 110.70 and be bought back up. And same with the euro yen and pound yen, looking to buy the dips, you know, probably off this same little cluster of support here. You hit that, did you, Potter? Excellent, mate. Excellent. I saw the rally. I think we talked pretty clearly about the rally in the dollar yen to 110.40 and then take stops to 110.50, but I was not expecting all the way to 111.30 today. That's much bigger than I was expecting. I was out of all my... I was actually via Aussie yen because of that really strong data. I'd hopped into some Aussie yen around about 83.50, and so that was a nice little bounce. In terms of the Aussie, it's holding, and it looks a little bit weak on the charts in terms of the new lower highs and the back below 76. But if it can keep on holding, then this pair is a very grindy sort of pair, and we are still looking for the major resistance after putting in that big bottom. So up here above 76.50, this whole area is not just resistance from back in March and February. If we go back last year, that zone, holy hell, is there some selling going on up here. You know, you could have sold probably like 30 times last year at 77 and made money. So yeah, obviously it's going to be a big ask for the market to break into an extended uptrend in the Aussie, given that there's still a backdrop that's a bit more dangerous, a bit more negative, about China, about the iron ore, and just generally with the US dollar being able to push back, and some data being a bit mixed out of Australia. It makes sense to be selling up to 77 if the market wants to get there. Probably a little dangerous to sell now. They haven't really seen a reason to sell just yet. You don't sell just because of a couple of days of price action. If you're trading a pair which is grindy, you really want a reason, not just for the Australian dollar to sort of turn around, but for say Canadian dollar and New Zealand dollar to also turn around at the same time. And those let's bring them up together. And sometimes I think I should just have the 6 major pairs on here without dollar Swiss. Would make for some interesting sort of viewing. Had the commodity currencies on top. Just not even look at the indices at the moment because they're just going one way, aren't they? Apart from DAX had a little pullback, but it's so what we'd be looking for here is, let's mix it around, Aussie and Kiwi to start falling both together, and then a bit of buying in dollar CAD as well. If we can break some key levels and get a sustained sort of rally, but when this is happening, these are rallying and this is rolling over, there's just no reason for us to get involved. They school together. So how do they school together? Well, you get the CAD yen, Kiwi yen, Aussie yen, but also Euro CAD, Euro Kiwi, Euro Aussie all selling off. So that helps. The group works together most of the time. Yeah. And if you're bullish sort of still on two of them, it's hard to be bearish on the other one. And in those rare situations where that's happening, what you'd be doing is you'd be playing them against each other. And that's, the trade I got going at the moment from yesterday is one of those, and that's Aussie versus the Kiwi. Now, where does that really come from? It comes from the Kiwi being overbought, whereas the Aussie still mid-range. So basically 73 is the Kiwis, 77 on the Aussie. So we've still got a little bit of catch up. So it's not the big trade we're looking for, we're just looking for 100 pips, but it looks pretty high probability. Oh, it was looking better. Testing a big level now. And, we're not risking much, 30-40 points on that. Kiwi, gonna break the souls. What did we say about a month ago? No more trading the Kiwi. Yeah, Kiwi's just such a frustrating pair. Such a frustrating pair. Can you just give us a break, Kiwi? We're only asking for a little bit of a sell-off, so Aussie Kiwi can get to 106. Nothing crazy. Nothing crazy. Yeah, the reversal in the euros. I mean that's more sensible, right? I mean that there was going to be buyers on the dip in the euro, but now we can start to see if this is going to be a major top, then we really shouldn't get back past 112. And if you see a rejection off that, then we can start to focus more on the downside. If that's happening, then you can get a little bit more bullish on the dollar yen, and then you can go jump across, see if the yields are starting to rise. Is there something happening in the backdrop? Is there the market starting to price in a Fed rate hike, and they're not. You're looking at this right now. The yields anyway are not starting to rebound at all. Oh my god, it's really hard to get excited about dollar yen longs when this is substitute action here. That key level's all the way up here, 2.3. So there's no reason to suspect that we're going all the way back up. Alright. Okay, so yeah, there's been a bit more analysis pointed out over the last 24 hours regarding the Yellen and a hawkishness. I suppose the big surprise last night was the BOE. It was even more hawkish than Yellen. And you might start to see this in coming months. So many central banks are turning the page. So you had Canada. One of the members came out suggesting that they're going to review the current state of stimulus. You've had that really strong data from the Australian, in the last two pieces of data from Australia, that suggests maybe, if they wanted to change direction a little bit, then, the RBA may come across a little bit more concerned about our employment because it's so full. And you also got, both Japan and Euro talking about balance sheet reductions. So the market is, getting a little bit more surprised from some of these central bank moves. And obviously when these moves happen, they do have bigger effects because the market's going from neutral or nothing happening until 2018 to potentially something happening. And it was only a couple months ago that people were expecting RBA to raise rates at the end of 2018, and then that got pushed back with iron ore dropping 30-40%. But if data keeps coming out like it did with that unemployment numbers, the last three unemployment numbers from Australia have been ridiculously strong. All right, so you got your weakness in your exports and your major commodity, but you got some strength in just your local economy. And when we say housing prices in Australia are a little bit dubious, they fell for the first time. Literally, they fell for the first time. They're still up 10% on the year. They fell 1 month, and everyone's getting super excited about that because it just doesn't happen. So the central bank's got some other issues to worry about than just our mining and housing. But we'll see. We'll see if they want to turn hawkish. Next week is the next big thing coming is RBNZ. Now, in New Zealand, we've had much stronger data and much stronger dairy prices. But you remember last month when we were trying to anticipate RBNZ going dovish, and that was at the bottom of the range. And this is the price action we got that day. So they still remained. That we expected them to go hawkish because of the data, and they came out and just even more dovish. It created a new low, but that was the low. That was the lows since then, literally since then. So as we've got higher, if they come out more neutral and a little bit, acknowledge some of the. This is early next week. Let's tell the exact day. Exact day. So Wednesday night in Europe, in US, Thursday morning Australia, RBNZ, you will see the rally in Kiwi sustained. So we really want to be out of our Aussie Kiwis before that. It's more and more likely that the RBNZ has to shift, right? And they can't keep talking it down forever as well. So they've talked it down for the last 3 months pretty aggressively. And that's going to lose its effect if they seem to be losing, losing credibility with the market. So we'll see. We'll see how it plays out. Yeah, no, it is surprising, Jenny, the strength in these yen crosses. Really just, could be the beginnings of a trend change. I think we just have to see higher lows. Now a couple of nice higher lows and the market will change with it. But we got so excited on the last time the euro, yen, pound, yen were trying to rally. But since then we're past a couple of things, right? We're past the UK elections now, so maybe if the path wants to go up, we can really get a more decent rally in. I don't know. It's there's been many false starts in our yen cross rallies, haven't there? The market hasn't really had a good multi-month rally in anything for a long time, in currencies anyway. This dollar yen, even though the ranges are bigger than other pairs, is still pretty subdued price action. And it can be argued that they're still in a downward channel, but we'll see. We'll see. Alright boys, just let me check that. Just a little work-related. Client wants to know some things. Everything's good. Everything's good. Nothing to worry about. Let's have a look at some of the research out there as we end up the week. I don't usually stream on Fridays. A bit lucky, you guys. A bit more. But we did have Monday off, didn't we? I think we want to buy the dips than anything else. I don't think we should start to just crack on right now. I think it's much more dangerous to be buying until we get a solid sort of confirmation. And there's so many yen crosses in rally right now. You can pick a poison, right? So some days it's hard to find something to write about. Today is the opposite. So much going on, hard to keep it on one page. Alright. QE's ending in the US. That's meaningful. Right. Yeah, having gold pull up. You know, remember gold was remarkably resilient on the way up. Yeah, gold's struggling too. I think, you know, the fact that you got that balance sheet talk is probably going to have a more prolonged, you know, after effect than many other sort of statements. Q looks troubled. Did touch that 73 level. RBNZ remained dovish. Probably, you know, given that they did come out the RBNZ stability or whatever it's called to this week, it's likely that the RBNZ is going to remain to be dovish. It's not so much that, that's predictable. What is seemed to be the situation though is whether the market's going to respond to the dovishness this time. But it doesn't hurt to be, you know, looking at the Kiwi as potential sell at these levels, that's for sure. It's just a little hard to get excited. He's tempted to sell pound into this. Jesus. Doesn't think that the 5-3 votes predict reliable. I don't know. I mean, 5-3 is pretty close, right? Another couple of strong months of CPI, I think we get ourselves a rate hike this year. Especially if there's no volatility as Brexit negotiations begin. Let's look at DXY. See, that looks like it's bottoming too, so that makes, you know... Oof. Maybe we should explore getting a bit more aggressive on dollar yen here. Still, we've got to be patient and wait for a pullback. What's the diving horses? Yeah, I know. I never saw one. For the gypsies. Yeah, I've never really heard of that. It's madness, huh? Right, let's have a look. So he's basically saying whether we're going to continue on in this dollar index similar to 1990s. Yeah, this is Deutsche Bank. Deutsche Bank's been pretty bearish on a few on the majors. They're actually very bearish on the pound too. Tim Baker, you're under the pump, mate. You're under the pump. In Australia, we don't believe the strong jobs numbers an accurate read of the underlying economy. So does everyone. Like, everyone here is really in a bit of a sour mood about our economy. These guys are really bearish on the Aussie Kiwi. Keep in mind when we're reading this. Iron ore's hit a 1 year low. Dairy prices remain resilient. Ratio suggests 2 Aussie Kiwi downside. They've been talking about this for a while. But this is a pretty good chart, right? This is dairy prices versus dairy price index, GDT. That's the auction we get every couple of weeks. And iron ore prices, look, that divergence is pretty strong. And when mapped against the prices of Aussie Kiwi, there is definitely a relationship. It doesn't always have to happen the same speed, same time. Remained resilient up here, so it's not exactly, you know, for sure, but you know, that's what a lot of people are playing the Aussie Kiwi on. You Brett Donnelly, Red Rhino, looking to sell the pound. You don't believe the Bank of England. Yes, I'm guessing if RS was here as well, he would be talking it down too. Oh, there's 3 people at the Bank of England who see it differently, right? Who are concerned about it. I do believe Christine Forbes, though, it's her last meeting. Is that true? That's her last meeting on the Bank of England, I'm pretty sure. I will look into that, but it's okay, who's actually leaving? Forbes' last meeting. Forbes' last meeting. Yeah, it is. Christine Forbes' last meeting, so they will have to see the replacement, whether it's the same sort of... That means that next month he's probably looking for, you know, a 6-2 probably. But we'll have to see who they actually get in. And yeah, retail sales were weak and wage growth was weak. That points to consumer spending, you know, not being great, right? And you know, why would it not be great? Because they're not earning, you know, more wages. In theory, Brexit talks are supposed to begin in earnest next week and the week after, but I don't know. You know, perhaps they'll be delayed a little bit. You might get a deal with the Conservatives and DUP over the weekend. You know, next week's going to be interesting for the pound, and you know, pretty interesting for this dollar yen too. You know, there's a pathway where the dollar yen goes back up to 113, euro goes back towards 111, and the pound rolls over with it. but there's also the pathway where the US dollar weakness gets, creeps back in. Euro consolidates above 113, and then we have to, remain on the front foot there. So we'll see how it pans out. I'm going to be looking more at the Kiwi and the RBNZ, looking for potential signs there. The Kiwi's rolling over. See if I can get some nice levels to sell the Kiwi into that RBNZ. Stops above 73 makes sense. And then, looking to buy dolly and dips on the first attempt, just to check whether this rally is going to continue. Alright guys, have a good weekend. Everyone trade safe. Hopefully we have some new trends developing here, so this is good for us trend traders. But it's a little too early to call the end, I think. A little too early.